This is Nightly Business Report with Sue Herrera and Bill Griffin.
Record rally. The S&P and the Nasdaq close at new highs as the Federal Reserve Chair reassures investors and says the economy looks strong. Losing ground, stock pickers are not doing as well as their passive peers, but some say that could change. The holy grail of classic cars will show you what could be the most expensive vehicle ever to sell at auction. Those stories and much more tonight on Nightly Business Report for this Friday, August 24th. Good evening, everyone, and welcome. Bill Griffith is off this evening. We begin with the market. Today, the S&P 500 and the Nasdaq closed at their highest levels ever. This comes just a few days after the bull market marked a milestone, becoming the longest in history. So let's get right to those numbers. The Dow Jones Industrial Average advanced 133 points to 25,790. The Nasdaq added 67 and the S&P 500 was up 17. And all of the major averages were higher for the week. Investors' optimism got a lift after the head of the Federal Reserve defended the central bank's plan to gradually raise interest rates. Jerome Powell made the comments at an event attended by some of the world's most influential central bankers meeting in Jackson Hole. And Steve Leisman was there.
Federal Reserve Chairman Jerome Powell in his first meeting as chairman at the renowned Kansas City Federal Reserve Bank conference in Jackson Hole, saying that gradual rate hikes remain appropriate, but cheering markets by saying there does not seem to be a risk of overheating in the market, this despite huge amounts of fiscal stimulus. Powell also said the U.S. economy has strengthened substantially, but maybe more important for markets, he said that the strong economic performance he expects to continue. He also said the Federal Reserve will do whatever it takes if inflation becomes unanchored. The Fed looking for a 2% inflation target, and inflation is right about there now. Now, there was a concern that Powell expressed about whether or not the Fed ought to be looking at inflation or perhaps at financial markets. Powell saying in his speech, in the run-up to the past two recessions, destabilizing excesses appeared mainly in financial markets rather than in inflation. Thus, risk management suggests looking beyond inflation for signs of excesses. That suggests Powell's going to be looking carefully at stock and bond market valuations for signs of whether or not the Fed is raising rates too slowly. Well, there are a lot of issues for the Federal Reserve to worry about, including global contagion and trade wars. St. Louis Fed President Jim Bullard said this August is a lot different from past August when the Fed met under crisis conditions.
We've not been in as good a situation as we are today for a long time. I think coming out here, a lot of times we were in crisis mode when we were doing
August,
this.
It seems, right, yeah.
Yeah, so I do think we're in good shape for today, but monetary policy is about trying to think out,
Sure.
to play it out 2 years ahead.
Of course, Federal Reserve officials from all over the country and all over the globe gather here. But there's also some wildlife, not by central bankers, but actual wildlife. The monetary moose and calf this year usually makes an appearance, and she showed up, and who knows what that means for central bank policy in the future. For Nightly Business Report, I'm Steve Leisman in Jackson Hole, Wyoming.
The Trump administration is doubling down on its economic agenda, touting growth, deregulation, and trade. But on that last point, as Kayla Tausche reports, there's a lot of unfinished business.
U.S. and Mexican officials hoping to reach a deal by today, staying in the NAFTA trenches through the weekend. Negotiators racing the clock to reach a deal by the end of next week so it can be signed by Mexico's outgoing president. Once the U.S. and Mexico reach an agreement, Canada would rejoin talks for the first time since June.
We keep on working. This is too many items that have to be finally solved. So we keep on working.
Negotiators racing the clock to reach a deal by the end of next week so it can be signed by Mexico's outgoing president. Once the U.S. and Mexico reach an agreement, Canada would rejoin talks for the first time since June. One possible olive branch, dropping a Washington demand the deal must be renewed every 5 years. Called a sunset clause, it's been a sticking point for Prime Minister Justin Trudeau in particular.
Most of the investments people look at today have 15, 20, 25-year timelines to them. So we don't really feel that a deal with a sunset clause is much of a deal at all.
NAFTA is just one of the unresolved trade disputes for the Trump administration. Steel and aluminum tariffs are still in place for European allies and doubled on Turkey. And talks with China coming up empty despite hours face-to-face at the Treasury Department. Officials from Beijing arriving in Washington with no new offer to resolve a months-long tit-for-tat, leading President Trump to call off a visit by Secretary of State Mike Pompeo to North Korea until China becomes a better trading partner. That could take months. The U.S. is studying a new set of tariffs that would target half of all Chinese imports, and the possibility of labeling China a currency manipulator in a mid-October report. All before President Trump is set to attend the G20 summit in late November, coming face-to-face with the heads of many states where the U.S. trade agenda is playing out. For Nightly Business Report, I'm Kayla Tausche in Washington.
And officials in China are not pleased with the trade dispute and are working to protect their economy from the fallout. Eunice Yoon has the details from Beijing.
The finance minister said that China will strike back every time to defend itself, but that its counterstrikes will be targeted. Speaking to Reuters, Minister Liu Kun said, "We are responding in a precise way." The minister said China didn't want bystanders to become collateral damage, including American companies, saying, "When we take measures, we try our hardest not to harm the interests of foreign businesses in China." But the minister said that he's most concerned about the welfare of workers here. The trade conflict, he says, hasn't hurt the economy much so far, but he is anticipating job losses in the export sector. So to counter that, he said that the government is spending more to help unemployed find new jobs and ensure their basic Social Security. He said Beijing also wants local governments to issue more special bonds to fund infrastructure and expects the bonds to blow past $145 billion by the end of the current quarter. But the minister insists that the more proactive fiscal policy won't blow out the budget, saying we aren't talking about massive stimulus, nor do we want to incur financial risks, let alone getting the government to take care of everything. But many economists worry that the greater spending would only create more financial problems for China down the road. For Nightly Business Report, I'm Eunice Yoon in Beijing.
On this day, when the S&P and the Nasdaq closed at new highs, Morningstar is weighing in on a classic market debate over active versus passive investing. In a new report, Morningstar concludes that passive investing is outperforming active stock picking even at a time when volatility is picking up. Bob Pisani has more.
Stock pickers are having another dismal year. Twice a year, Morningstar publishes a report that measures the performance of U.S. active stock funds against their passive peers. The latest conclusion, same as in years past, stock pickers are still losing out against their passive brethren. Just 36% of active U.S. stock fund managers outperformed their passive peers over the last 12 months. It wasn't much better a year ago. Just 43% outperformed in 2017. Why can't active managers outperform? Well, they have cash on the sidelines. That's the first problem. Second, they often have the wrong mix of investments. Underweighting winners is a big issue. So if you're underweight Apple in the last year, for example, you're going to underperform. Third, this is the most important thing. They charge fees, higher fees. The highest hurdle active managers face is their own fees. Active funds that charge the lowest fees were able to outperform their passive peers more often than those that charged higher fees. Think about this. It makes sense. If you charge 1.5% and your competition only charges 0.5%, you're going to have a problem performing long term. You're going to underperform. Ben Johnson, who authored the report, said investors would greatly improve their odds of success by favoring low-cost funds, which succeeded far more often than high-cost funds over the long term. Makes sense. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
But other investors say stock picking can be a better and more lucrative strategy. We are joined by Nancy Tangler with Heartland Financial. Her actively managed fund has outperformed the S&P 500 every year for the last 5 years. Welcome, Nancy. Nice to see you again.
Hi, Sue. Thanks for having me.
Bob laid out some of the things that he's hearing from people about why maybe active managers are not performing as well. But as you see it, and as a successful active manager, why do you think some are underperforming?
I think many active managers, Sue, are afraid to take risk, and that is actually one of the biggest risks in investing, is to not take enough risk. So they over-diversify their portfolios, and then they end up generating market-like returns. We run very concentrated portfolios. When we like a stock, we like it up to 5% of our portfolio. So our top 10 holdings represent almost half of the portfolio. That's how you beat the market over time.
What do you look for in a stock? Does it have to do basically the yield relative to its history, the dividend? How do you pick a stock and put that type of concentration in?
Yep. So we do look at relative yield because the management set the dividend policy out of free cash flow and earnings. So it gives us insight into what management thinks. And then we compare that to the stock's history and to the S&P 500. It's a simple calculation. Actually, anyone at home can do it with data from CNBC.com. They can pull up those numbers. But what you find over time is you get these long periods of under and overvaluation. So 3 years ago, Apple came into our screens. We bought it. No one liked it at the time. I got into a number of friendly debates on the air. But we were buying the stock, in the 80s, while other managers were saying it was just an iPhone company. You have to be committed to your discipline, and you really have to have an opinion about whether or not management is up to the task. Because when you're changing a company like Apple, you've got to have the right leadership in place.
You mentioned concentration, but I assume that does not mean that you don't have diversification.
That's correct. So we won't let our portfolios get to a huge overweight to the S&P sectors. We'll only go up to about a 50% overweight, and we won't let a stock get above 5%. But if you don't have the conviction to buy more than 1% in an individual stock, you have no business owning it. So our view is we overweight the highest quality, cheapest stocks, and then we add some risk around the edges. We accessorize with risk. With some of the stocks we have maybe less confidence in, we hold a little bit less in those particular holdings.
All right, Nancy, thanks so much. Appreciate it.
It's good to see you.
Good to see you as well. Nancy Tengler with Heartland Financial. And for those who do want to stick with stocks, our market monitor is coming up, and he has a list of names that he says could rise as much as 20% over the next year. He's with us a little bit later in our program. First, though, it's time to take a look at some of today's upgrades and downgrades. Netflix was upgraded to buy from neutral at SunTrust Robinson Humphrey. The analyst is upbeat about the company's opportunities in India. The price target is $410. The stock rose more than 5% today to $358.82. Children's Place was upgraded to buy from neutral at Monness Crespi. The analyst expects double-digit earnings growth over the next 2 years. The price target is $165. The stock rose 1.5% to $137.85. Philip Morris was downgraded to hold from buy at Jefferies. The analyst sees significant share loss during the second half of this year. The price target is $80. The stock dropped 3% to $79.69. Still ahead, how trade uncertainty is impacting a small South Carolina manufacturer. Fairfield County, South Carolina, suffered a series of economic setbacks in recent years. A Walmart shut down, so did a textile factory. A hospital is preparing to close, and a nuclear power plant was halted. And now a local manufacturer could close its doors, and the company is citing trade uncertainty. Kate Rogers is in Winsboro for us tonight.
This South Carolina plant assembles TVs with parts imported from China. But tariffs on those parts may raise costs, putting the plant and more than 120 employees in peril. Element Electronics declined to participate in this story, but in a letter to state officials sent earlier this month, the company says it will close down this fall and lay off 126 employees, adding it's hopeful the closure will be temporary. Democratic State Senator Mike Fanning says he's been working closely with state lawmakers, putting politics aside to keep the plant open. The tariffs the company is hoping to avoid are not yet in effect, according to the Office of the United States Trade Representative.
This is not the way to do tariffs, is that if you want to have a tariff policy, make sure that you're taxing people that are competing against Americans. This could be a blow, not to just manufacturing and jobs in our county, but even to retail and just basic quality of life issues for all of the folks in the county.
The company has ties to both Ambassador Nikki Haley, who was governor and helped to lure the plant to Winsboro, as well as OMB Director Mick Mulvaney, who once represented Fairfield County before both joined the Trump administration. But an OMB official said ultimately President Trump will make the final decision on tariffs, adding that Director Mulvaney has never spoken with the president specifically about Element. Another headache for Element Electronics, it's getting pushback from the Alliance for American Manufacturing. The group says Element shouldn't be exempt from tariffs because they're not a true American manufacturer because of the fact that they import their products. Meanwhile, Winsboro is in wait-and-see mode, and residents like Crystal Palk, owner of a local donut shop, are concerned about more job losses.
I look at it, doors closing, those are jobs, those are parents, those are families that are impacted, those are their dollars first before it trickles down to us.
And local officials can only hope tariffs are avoided.
We are fighters and survivors, and we will survive, and there will be something good that comes out of this.
For the moment, it's a matter of buckling down, waiting to see what a trade war means for the future. Kate Rogers, Nightly Business Report, Winsboro, South Carolina.
Foot Locker faces some high hurdles, and that's where we begin tonight's market focus. The athletic shoe retailer saw sales growth slow in the most recent quarter, and they're not expected to improve much. The company issued a downbeat revenue outlook despite reporting better than expected earnings. Shares were off more than 9% to $48.32. Clothing retailer Buckle, on the other hand, saw same-store sales climb at a quicker than expected pace. Earnings and revenue both topped expectations, but the stock fell 4.5% to $26.55. Hibbett Sports said strong performance in its e-commerce business was not enough to offset weakness in other areas of its business. The sporting goods retailer reported a surprise loss and sales that fell short of estimates. The company also slashed its full-year outlook. The shares plunged 30% to finish at $20.53. And Arconic is reportedly in talks to sell itself. Reuters says the aluminum products maker is talking to a number of interested private equity firms about a potential deal, but added that some of the firms believe Arconic's acquisition price is too high. Shares of Arconic rose nearly 5% on the news to finish at $22.23. And now to our weekly market monitor, who has names of stocks that he says could grow as much as 20% over the next year. This is his first time on the program, so we welcome Josh Jelinski. He's the president of Jelinski Advisory Group. Welcome, Josh. Nice to have you here.
Great to be here.
Let's start with your first pick, Tencent. It's a familiar name to me because my kids play Fortnite, and that's one of the reasons why you like it.
Yeah, Fortnite is exploding all over the U.S., but we like it particularly because it hasn't even been approved for play in China. So when a Chinese-based company is massive in the U.S., there could be potentially 800 million users in their market in China. Once they get approved, that could be great for the stock. We also like the WeChat app that they have, their investments in Spotify, Snap. They're ubiquitous with online gaming as well as social media, and they're really driving revenue as well. One interesting point to note is that social media advertising revenue has gone up 55%.
Right.
So that's huge.
Next is Facebook. Obviously, an enormous number of people around the world use Facebook.
Yeah, billions of users use Facebook, and although it missed its earnings beat just slightly, we see it as the new potential for Google AdWords. We see a lot of companies driving away from spending money on Google, and they're reaching consumers at an all-time high in Facebook. From anything from if you want a better body to you see all these. I see all these ads for getting a six-pack, right. And they're monetizing everything because they watch us. They know what we want, and they can target far better than Google AdWords. So we think there's a great potential there.
And next is CVS. It did take a bit of a fall because there's been so much jockeying going on in this particular part of the healthcare division. Why do you like CVS?
Yeah, it took a real fall back in April and May. We see that they're launching sort of a one-stop shop. They have over 1,000 of these kind of one-stop shops where you can get a flu shot, you can get pharmaceuticals, you can get organic food. They're cropping up everywhere. They're picking good stores at good locations. They could certainly become a better stock long term, we believe, than some of their competitors like Walgreens. And some people look at the Aetna deal as a potential problem for the stock. I could see that as an opportunity, as especially with the Trump administration looking for cheaper health insurance plans. This could be how they do it, merging this sort of one-stop shop, maybe put even doctors in the pharmacies so you could go there for a flu shot and they could write you a prescription. It's going to be so convenient. Then you just get the prescription filled at CVS.
All right, Josh, thanks for joining us. We appreciate it. Josh Jelinski with Jelinski Advisory Group. Coming up, rev up your engines.
I'm Robert Frank in Pebble Beach, where trucks and Jeeps are the new Ferrari. And many buyers and sellers worried about how tariffs could put the brakes on the classic car market. Coming up on Nightly Business Report.
Procter & Gamble may be trying out a new approach to connect with younger consumers. The owner of Dawn soap and Tide detergent has reportedly applied to trademark three-letter acronyms, often used by millennials in text messages for use in its product marketing. The most common one you may have heard of is LOL, which stands for laughing out loud. Activist investor Nelson Peltz has repeatedly criticized the company for its lack of innovation. Thousands of classic cars will cross the auction block this weekend at Pebble Beach's annual auto event. And while many of the vehicles could fetch more than $1 million apiece, there's one in particular that is stealing the show. Robert Frank is in beautiful Monterey, California with our story.
It is the Coachella for cars, the Burning Man for burning rubber. Nearly 100,000 people descending here in Pebble Beach for Car Week. 1,200 cars are coming up for auction for a total of more than $350 million. But all eyes will be on this car, a 1962 Ferrari 250 GTO being sold by RM Sotheby's that will become the most expensive car ever sold at auction. Estimate $45 to $60 million.
So what makes the GTO so valuable? Well, Ferrari only made 36 of these cars, so they are among the most scarce Ferraris ever built. They also dominated the racing scene in their day, winning over 300 races. And look at it. This is one of the most beautiful, if not the most beautiful Ferrari ever designed and built.
It's being sold by Greg Whitten, one of the first Microsoft executives who bought the car 18 years ago for about 1/10 the current value.
It's very hard to fathom, but you know, you're in a space where you have collectors and car collectors, and Ferraris are the most collectible car, and the GTO is a pinnacle Ferrari, and it's just an amazing car to have.
The hottest part of the car market right now is older trucks and SUVs. Blue-collar collectors and young buyers love the utilitarian look of the older trucks that are also easier to repair.
Those are accessible vehicles. They made them in very large numbers. They're easy to work on. They're easy to find parts for. And they just have a very, very broad appeal. And they match what people are driving every day on a daily basis. Trucks, SUVs, that sort of thing. So if people want a vintage version of it, that's where they're going.
One threat to this market is tariffs. A lot of the classic Porsches, Ferraris, and Mercedes sold in the U.S. are from European sellers, and tariffs apply to all new and used cars, so it could add 25% to the price and choke off supply.
The issue that we're going to have is nobody's going to be willing to pay an additional 25% to get their car. So there might be a 20% advantage to bringing it to the U.S. to sell it, but if I have to pay 25% to get it here, it's going to kill that market.
But for now, the classic car boom shows no signs of slowing. For Nightly Business Report, I'm Robert Frank in Monterey, California.
And that is Nightly Business Report for tonight. I'm Sue Herrera. We want to remind you this is the time of year your public television station seeks your support, and we thank you for it. Thanks for watching. Have a great weekend. See you on Monday.